Okay, yo, what's up, guys? I hope y'all having an amazing day. We're gonna get into part two of kind of putting it all together. How did I get a 9-minute chart on here? That's like crazy. I don't even know how that got on there. But we're gonna jump right into it to pick off where we left off from the first video. We're gonna keep it rolling. So we're gonna take a look at GBP USD. We talked about some softness in GBP USD in the last video, and we seen that continue going softer so far. So it looked like we still got a sell model to complete with the stops below here. So like we can get some potential a low resistance liquidity run going this way versus us going towards this way. So it looked like we still could be in play for that. So what I just want to get back right and to kind of just talking to you guys, take you through setup just like I was doing in the first videos, because you've seen it over and over again, how you pin together and using these concepts that we've been teaching so far to come to your setups. Then that's how you're going to be able to go to your charts and apply it, and even go back and review your notes and some of the old videos, and make a lot more sense. So let's talk about this setup that we had here, right? And let's break it down. So sometimes I don't even have to go all the way up to the monthly chart. Like my favorite time frames is the daily, weekly, and 4 hour for the higher time frames. And then you learn how to use the daily and the 4 hour together, and you become a beast. So let's talk about what we had. So we knew we talked about this yesterday. We had this order block in price which was a weekly resistance, right? So we had this weekly resistance in price. Price took out the stops here, right? The market makers filled in a gap in price. So let's go down to the daily time frame and see what the price action we have. So I don't know why this Tuesday closing out. I thought I had it open. Jesus. 1 second. Okay, so check this out. So when price came here to this weekly level, we'd have been using the weekly, would have been our first time frame, the daily would have been our middle time frame, and the 4 hour chart would be our lower time frame. All right. Remember, it takes 3 charts for the fractal flow. So seeing this move on the daily chart, this candle number 1, candle number 2 being made, right? That confirms our buy to sell. So we have that pattern created, and we know our range is this low to this high. So once we get that buy to sell created, we could go down to the 4 hour chart, right? And we could have been anticipating premiums to get short from that encroach with those levels. So if you look here, we have this up candle before the down move, right? We got this 4 hour order block. I mark up the body of it. You can see how price hits that before it starts selling down. You obviously got this liquidity above here, right? That price runs. So how could you be looking to get short at this, like we was talking about, when price actually gets to this level? Because since this is a 4 hour level, let's actually change this to my 4 hour color. Right, I could have been on a 1 hour time frame looking for a potential price action to show me that elephants was putting their foot in the water. So typically what that looks like is this. When price gets at or near that level, right, it gets at it and then it hits it. You see the buy to sell created, you got candle number 1, right? You got candle number 2, right? Buy to sell created, price pulls down, you get a retracement, right? This is your range. So you're going to pull the fibs off your range, which would be from this high to this low. Look to the left, we broke a structure, right? Boom. So we could have been looking to get short at the 79, and let's use a round institutional number to get a good trade. So 126.69, we could have been looking at 126.70 to get short. And that would put our short right there, right? We could have put our stops above this high right here, above this New York session high. Could have put our stops above there. Or if you wanted to be real safe, you could have put above this Asian high right here, right? Which would have been, oops, no, that's too fucking far. But a stop above here is about 60 pips. That's not bad for entering a long-term trade. How we showed you guys that if you're looking to complete this sell profile, you're looking at over 200 pips of profit. So that's still like a 1 to 4. That's excellent trade. These are the type of setups that I love taking because, like, I could do this. I could have $700-800 in my account, and I can take 2 5-cent lots on this. Even if I lose, okay, I lose $60-70. Who cares? Like, it's nothing. I'm not gonna like lose too many of these trades, dude. Like, because I'm not like jumping the gun. I'm not trying to like guess. I'm not trying to pick tops and bottoms. Like, we're putting stuff together that makes sense. And then once it gets to these levels, we get a chance to see displacement, get an opportunity to get into trades. If it don't give you those opportunities, there's nothing you can do about it. And I'm going to show you how you use these tools to read those situations of how you have to adjust when you have those type of situations. So let's say, for instance, we were looking at this price coming into, you see this up candle right here before this down move. This would be what we consider a breaker, right? So if I marked off the open, that breaker, right, it'll give us this price point right here. So I'm going to change this to a weekly color, right? Just my colors, you know, your own colors. So going out to a daily chart, right, using a combination of a daily and a 4-hour, you can see that these are some 4-hour stops below here, right? Price trades into that level. You could have been looking at this up candle too. This was the candle that consisted of making the old high, combination of both of these candles together. The old high, right? So we come back and dip into that candle. Let's see what we get. We see what we got on the daily and on the 4-hour. So on a 4-hour chart, right, what you'd have been waiting for is seeing if you had a sell to buy at that level. This is candle number 1. This is candle number 2. This is candle number 3. It doesn't give me the pattern that I'm looking for. So I could do nothing with that. What I would have to do is I would have to wait. This makes another down candle, and this second candle breaks to open the candle number 2. Then when you see candle 3 breaks candle number 1 and 2, it pretty much ends for the go. You see it retraces, or after it goes up, it retraces back down into this down candle, and then it takes off, right? So after, let's mark this area off. After this was made, you could have been on a 1-hour chart looking at price like this. You see in the buy to sell, price ran the lows, traded back in it, stop hunt, broke structure here, right? You know where we came from here. So we got this like swing, like this swing area, right? So this move is like 1, 2, 3. We come back to the first retracement, reaccumulate this breaker spot. Your trade could have been watching them reaccumulate that. They make a sell to buy off that level. Any retracements back into these down candles, you could have been a buyer targeting 4-hour and daily buy profiles, which have been targeted above these highs. Now, keeping in mind of their higher time frame level or the higher time frame essence that was been at, I want to show you guys something that helps me recognize how to look at price and when to engage when I need to be pulling my fibs out. It's kind of a visual thing. It really helps me. So if we came up to this level and made a buy to sell, since this is candle number 2, I would put a horizontal line on candle number 2. I would change it to my daily color. Like I said, you can have whatever color you want for yours. Red is my daily color, indicating that the buy to sell is complete on the second candle. So now I know when I go down to the 4-hour chart, watch this. Now I know anything as a retracement after that, back into these levels, I'm looking for 4-hour premiums to get short. I'm looking for using the 4-hour reference points to use as using levels to target as a higher time frame level, and then I'm gonna break it down to the 1 hour to get a better precise to see displacement and price action off those levels. So if we're looking at these levels like this, we can see like we had, like I say, this 4-hour order block right here. You could have been looking at these 4-hour stops above there, right? Because we'd have been looking for price to retrace. So now if we're looking for a swing to pull price off of, we write this is a short-term high, short-term high. This is an intermediate high, right here. So we could have pulled our swing from low, either low. We get a hit right to the 60%, Fibonacci 62% right there. So it's in a premium market, right? And then I broke down to you what we could have did on the hour chart to actually get short at that level. The displacement we'd have been looking for. Look, this happens at London Open, and this happens at New York Open, right? So you remember what I said about what you guys when we get a range? We had to move up. Now we got a balanced range. What did they do? It went back to the high, ran a rejection block, right? And then they took off. This is the low. This is the low. This was the high. This is the next high it made. And then it took off. That's how I played in the range. Broke right back to the order block right there, and then took off. Retrace right back to the low, then took off. Right? So even if you miss these moves up here, you got to be following price for what profiles and what's the next targets. You knowing down price is going to be chasing down candles, up price is going to be chasing up candles, right? It's backwards from what they teach you in retail. So when you looking at price breaking levels like this, like when they break this level here, right, on this big swing down right here, this big move down when it breaks that level, right? You know that this range is your range, 1, 2, 3. So you got three options, I mean. And I want to show, this is why I showed you guys this picture right here. So every swing consists of A to B, B to C, C to D, like 1, 2, 3. Then they have a retracement. The retracement is either going to be small, medium, or large. This is what a small retracement looks like. After the D point, you usually returns to the old resistance or something and keeps going. A medium retracement, they usually use the range that was made between C and D. And a large retracement can go down deep into A and B, or even run the stops of the origin point of A and then go up. And I'll show you what I'm saying because it's an example in this right here. So you can see how price made a swing down, 1, 2, 3. So we had a minor retracement, a small retracement. Going back up here would have been a medium retracement, and going back up here would have been a large retracement. So we had a small retracement. What level did we use? We had a gap that was right there. And we had an old low, right? 1 hour old low. So we traded into that. And then price fell off. So we got a confluence of filling in the gap and an old support, turn resistance. And then here we didn't quite get back up into the 50%. But if we could have been looking at potentially using, no, that would have just been that. Okay, so the important thing for you guys to realize is when you're looking at these higher time frame charts like this monthly or weekly chart, it's the same when you're looking at the lower time frame charts. Look how price ran below these lows and then they closed back up. That's an indication that they sell stop low, that they went low. So if they're accumulating buy liquidity, then they're going to have to deliver it to buy side liquidity, right? So if we are like, okay, we came down into, let's see, let's say we came down into this weekly, zone. Monthly zone, On a weekly, look at the reaction we had on a weekly out of that area. We had this candle number 1, candle number 2. Candle number 2 breaks the open of candle number 1, so it makes that an official buy to sell program. So now what we have is price confirming that area. So now we're looking at this order block. This is a support point. The main threshold of that is a support point. This is a support point. Now you can see price makes a low, makes a little bit lower low, and then booms up. Why? Because price confirmed this level by making a sell to buy, right? You can use a combination in the daily and weekly to read this level. So you see it, if you'd have been using the daily, which you should be using all 3 of them, you could have looked at this as a completion of the sell and buy. So this could have been the low of that pattern. And this could have been the high of that pattern. It would have been your range. So anything from this point and behind on a 4-hour could have been used as a discount. And we're going to see how that works. So we could have been using, let's mark out the discounts. You could have been looking at this order block to get long. Right? And I'm marking off the open of this down candle before this up move, right? That's a bullish order block. You could have been looking at the rejection block, which is the bottom of this lowest down candle, the close of it, down to the wick, to the low of the wick. You can see that level. You can see how price stabs down into that and then takes off. Now, obviously, ultimately, you could have been looking at the liquidity and rests right below that. So as you can see, price comes back into this rejection block area. Now let's see what we would have had on a 1-hour chart at those 4-hour levels. Okay, so check this out. These is those 4-hour levels that you'd have been looking at. You have price. Since this is a 4-hour level, you could be using 4-hour, 1-hour, 15-minute to engage these levels. One key thing about fractal flow, this is what you have to remember. Since we're engaging in 4-hour levels, since the 1-hour is the middle time frame, if the 1-hour structure breaks, like swing high breaks, it's over. Like if they go up that high to break it, then they're probably going to be going up, getting in sync with that 4-hour flow or daily flow, if that be. Let me take a drink. All right. So let's apply the time theory into this also, so we can see how we wouldn't just be using price to get in turn in sync with this level, but also using time combined with price. So let's use our price theory that we taught about the session times. So we have London open right here. You see London open makes a high. The open of the day is here. So if we're going to be getting long, we want to be getting long below the open of the day, which is here. So we have to get long at a price, at a rate lower than the open. So here we won't be able to get long because this price is higher than the open. We have to wait for price to trade lower than the open price if we anticipate it's going to be a long, or we're going to be trying to get long on price. Ultimately, the day just consolidates around and then it takes off, you really wouldn't have the opportunity to get long in this. But entering in consolidation is the best. So the point being is, if we're already anticipating these levels, now we can apply time and price theory. So here is New York open. So say for instance, you would have been getting long here in New York open at this down candle right here. Say we should have been getting long, running these lows right here, right? And you like it's below open. It's into another order block, these three combined candles right here, right? It's into an order block, right? So you could have been getting long here, and be like your stop could have been 10, 15 pips below this low right here, right? So, or even 10 pips below this low would have been good. So you could have been getting long there. You would have faced some drawdown, some play around, and then price would have took off the next day through Asian session. Picture on profit, going into London, kept going into New York, kept going into Asian session, pull back New York, late New York, reverse, turn back around, take back off London. Like you see how prices continue to climb up. So you would have got a good entry here. So say this is if you didn't get an entry there. What you're waiting for is the 1 hour to confirm one of these levels. So the price did all it did there. So then it gets down to this level. You see a sell to buy confirmed there, right? So even if you didn't take that, once this structure is broken, or even if you're looking at this structure being broken, you have to realize that the market makers are pushing price up. So now you got to be wary of the market flow and watching swing highs being broken, because they're going to be using those to retrace to and accumulate more price. And then that's when you just continue to walk price up in the form of fractal flow. Because like, look what happened. When price gets above this 4 hour swing high, we create more price action. We create more price swings. We create this old high, right? We small retracement, price pulls up, runs the highs, right? Large retracement of this range. Remember when we talked about how, remember how we talked about how every swing consists of a 1, 2, 3 move. Even if it don't look just like this, but this impulse move up, running previous structure, right? Breaking previous structure. It's ideal for them to liquidate some of their buys and then come back down and accumulate more buys to push up to for a higher buy program target, right? So when they make this swing from this low to this high, we're anticipating that they're going to retrace, so we can be getting short in this order block, or anticipating a turtle soup of this swing low, right? So they make a large retracement, bounce off of it, come back into this order block here again, right? Holds around that support and then takes off. So we have many opportunities to get long on price, with price all playing in favor of us continuing to find higher price, right? So let me get rid of something real quick. Let me get rid of this. See what I'm saying? It's down candle right here. Price came back into it, found support, and takes off, right? Right here. Bodies. We break, retrace back into it with the wick, and then take off. Bodies, bodies, break. Bodies, break. Bodies, break. Bodies. Like, you see what I'm saying? So what you guys have to be patient and waiting for is, you got to know your higher time frame levels. That's the key to trading, because now you can start anticipating certain things that happen, and you won't be tricked out when certain things don't happen. Like when you're expecting the market to trade higher, you see them break this swing high off a daily level on the 4 hour, you can anticipate that the 4 hour is going to continue higher to reach. So let's get rid of this. Could have been looking at this. So if you're anticipating price to continue going after this point and reaccumulate, then you're going to continue anticipating going to the next daily premium, going back up to the higher time frame premium array, right? Which would be that order block on the daily chart, which is one time frame higher than the 4-hour chart, right? I hope that makes sense. So what you have to realize is that's the whole point of the fractal flow concept, is you use 3 time frames to get your setups. You don't have to guess. You don't have to jump ahead of the gun. Price always leaves footprints. Always. Price always leaves footprints. There's never a time where price doesn't. You just have to be really paying attention to it and knowing what time frames and what pieces of price action that you need to be looking at. On the 4-hour, right? You trade up into that level, right? Here you trade lower than this level, which is a sell to buy. Sell to buy, you break that sell to buy, right? Which is a support. Break that support, right? And now we're bearish. Institutional support. Now we're bearish institutionally, right? Now we're gone. You break this support here. Institutional support. We trace into it. Here's a long-term institutional support. Break away from it. Don't even break. No breakaway gap or anything. Create institutional support. Now we got a balanced range. But you guys just see the flow. It's even if you was using a 4-hour as your high, even if you was using a 4-hour as your high, let's go to a different chart so we can obviously we can pull up any level. So if you was using a 4-hour as your higher time frame, right? And you see we talked about dollar going higher at the beginning for a while now, so let's get it. So even if you was using this 4-hour level as your higher time frame level, right? If you're using this 4-hour rejection block right here to get long on this, to complete a potential buy program, these resistances, right, coming up into there, right, that level, confluence. But the point is, look, the 1-hour chart is the medium chart of that 1-hour level. So we're talking about getting long at, let's actually replay this to here. So we here. We just to be hitting the 4-hour rejection block. So let's mark that out. I know we haven't talked a lot about this, but I'm just showing you guys how we actually use these concepts. Weird. Doesn't matter. 4-hour rejection block, right? So we're anticipating this level to be a 4-hour support, institutional support. We're not trying to buy it once it gets to that level. We want the market to give us indications that it's going to buy. What do we look for? What time is it? It's 4 o'clock in the morning. It's London open. So let's see what happens. I mean, it's in 2 hours after London open. So let's see what happens. When we see price move away like this at that level, that's confirming that 4-hour level for us, right? So now, this is a 4-hour support. This is the 1-hour confirming that level. So now we're going to make a smaller range with the 1-hour. We're going to go down to the 15-minute chart. We're going to look for confluences to get long on. We got this down candle before the up move, which is the institutional support. We got this institutional support, resistance turn support. So let's see what happens. Look at that. Like, look at the fucking precision on that. You move this down to this down candle that we talked about, this institutional support, before this down candle, before the up move. That was a displacement off that 4-hour level on the 1 hour. Pull back, we get a turtle soup, which is even more powerful at that off the 1 hour. Yeah, it's 15-minute discount, right? 1 hour confirmation, went back down, found the 15-minute discount. We can get long off this, or you couldn't wait for the 15-minute to confirm, retrace back into the 15-minute time frame. You get long there, right? You could have been in price, right? You would have took your Fibonacci's from this low to this high. You get a retrace, and this is New York. Look, 7:00 a.m. New York open. 79 retracement. You could have been getting long there, or profit taken for the day. Like, look at that. Remember, I said you won't get long on the up day unless it was under the open. This is deeply under the open. Now we're going to run out everybody that we tricked going into London, early London. All these sellers are going to get taken out now. Their stops are here. You got stops here. You got this old London close stops, and then you have this New York high, daily high here, right? So that's how you're engaging price. You don't have to guess, man. You're not in the business of guessing. There's no guessings that goes along with this. You're waiting for price to hit certain levels. You're waiting for price to get to do certain things. You're not trying to anticipate or be that guy, right? I trust my higher time frame levels, that they're going to offer support, that they're going to be there for me, and I can trust them. Like when I have my higher time frame supports like this, that I can go down to my 15-minute charts, right? Right, and I can look at those levels and I can wait for certain things to happen because I know I can be patient, right? Well, right there, I could have been getting short because this was long. This is candle number 1, candle number 2, candle number 3, breaks candle number 2, retrace back at the candle number 2. We could have been getting long right there, right? And for a potential London, New York close, London close move, right? And it's like my odds, yes, it could turn around, but my odds are so much higher, right? My odds are way higher than the average person. So it's like, it's easier for me to win more trades because even on a trade like that, if you got short right there, like I said, that's 17 pips to draw down. And from your position, you would have been up 48 pips. And you still would be up like 25 pips. Like you see the precision on this type of stuff, man? Like you're using the higher time frame levels. You're waiting for order flow to confirm these levels. You're using the tools we're teaching, like the Fibonacci doesn't give you the trade. It just assists you once you find your range. You have to do the work to find the range. The Fibonacci don't find a range for you. This low here, down here. Let's get rid of all this crap. So we had a sell to buy already. I like to mark mine off like this. It's so much easier, cleaner than using the box. I just use the line. I mark off the candle that completed the sell to buy. Then when I go down to my 4-hour chart, it makes it easy for me to know all of these could be potential levels, like this 4-hour order block, right? And then you got this rejection. And then ultimately you got the stops below here. And now I can get rid of that. You got the stops below here. And those would have been my 3 levels. And now that I got those 4-hour levels marked off, I could have went to the 1-hour time frame and wait for the 1 hour to confirm price action. Because the 1 hour is the one that confirms price action for me. After I break it down, I need to get down. I'll go no lower than the 1-hour chart, right? So let's look at what happened. Price comes down. It hits that level, that lower level, shoots up, comes back down, shoots up, breaks some structure, right? Break some structure there, touch some structure there. And then we pull all the way back down, run the stops on this, run the stops on this, accumulate those sell stops of people who want to be breakout sellers, right? And buy it from them. And then we take the market the other way, right? These trades aren't hard. Since this is a 4-hour level, if you don't want to catch the bottom, or if you want to wait for price to confirm, your first confirmation was when price came. Now I keep those levels. I can explain it to you why I got the levels on. If once you make this 4-hour swing high right here, sell to buy, a nice one to see, a confirming one. Buy to sell, I mean. This isn't a buy to sell because it wasn't, this candle wasn't lower than, well, it was a buy to sell. This is a B figure one, it's nicer. So you see this buy to sell, right? Once you see the market take that out, that's a market structure shift. So now this leg becomes the swing low, and this is the new range. And we run the lows, make a deep retracement low, and then price goes the other way. Right? And so let's say, for instance, you got stopped out up in here, or you couldn't even get involved there because, like, this is, you got short there. You got stopped out, man. That was a deep run. So you could have potentially got stopped out in this area. Let's say we got stopped out. How would we still trust this to get long, right? Since this is the 1 hour time frame, we would need to wait to see the 1 hour do it again. See if they got the juice enough to do it again after making a stop run low and then closing back, right? Closing back even wick wise. The wick, well, not wick wise, I didn't mean to say that. Closing back under the bottom wicks is what I meant to say, of the low that it broke. Closing back inside it, right? So we got to sell to buy here. You break it. We got to sell to buy, about to sell. I'm saying this buy to sell to buy. We got to buy to sell here. We break it. Once you start seeing that again, you have to anticipate that the market is following the 4 hour market flow, right? You got to try your best to get in sync with that. It's not hard. It's not difficult, right? This is how we're winning our trades. Like, it's easy for me to find a range, right? Even if you're using a combination of a left side part of your chart to something like over here as a range, but finding a range, okay? And this is my range from this high to this low, right? And we're looking for reasons to be back long, right? You can see we had a immediate retap to that opening that fair value gap, which is an institutional reentry drill for us, which is something you'll learn about later down the road. Check this out. So we'll go down to the 4 hour chart. Let's go take a look at the daily level. Let's see what type of price action we get. How can we participate in this? So price comes up into that level here. We confirm about a sale here. Price maneuvers around, makes another low in that consolidation, runs the high again, and sells off. We break another low here on the 4 hour. We trace back into it, sells off. Now this is typical. We could have been looking at this old low here. Black. black, watch. So when they retrace back into this, you see it breaks the swing low. They sell to buy. It's a market structure break. It's give you your range. It's high to this low. Remember, nothing lower than a 1 hour time frame. Boom, boom. Optimal trade entry. Take the trade. Take the sell. You're in big profits, right? So even when they're breaking, this is an institutional resistance now. So a 4 hour resistance. So you got to see on the 1 hour they did show displacement away, right? And we traded back into it. If you want to know the exact spot where you could have been targeting, would have been this second candle. If you take the open of that right there, look at the precision. Because the third candle broke the second candle, so you used the second candle. And the first candle didn't break, second candle didn't break the first candle. Look at the precision on that. And then we sell off. We talked about how to take profits. We talked like when we're finding swings, right? And when we're looking for the market to go the opposite direction or continue going a certain direction, we can use that swing high or low as a focal point for potential profit taking that lines up with other institutional reference points, supportive resistances. You know, so if you're looking for the market to move below this point and further, wouldn't it make sense for you to target this low swing to this high swing? And now you can start seeing how price consolidates around that area. You start seeing further extensions because obviously price made new swings and new highs. It's all mechanical. It's all manipulated. It's all robotic, bro. Like all of this, bros and gals, all of this stuff is manipulated. You just have to be patient. You have to be patient in order to put this stuff together because it's not going to make any sense to you because you're trying to jump the gun on everything. A lot of the times when you see these old, like I like to use the 50%. Like what I mean by that is I mark then I'll find the middle of this candle, 23. I don't think I did it right. No, this is right. I'm on the trip and I was right. 23, 38. So I marked the 50% of this candle where this wick is at, right? So let's say, for instance, we went back to price. Let's look how price reacted at that daily level. Turn it to my daily color. So look how price reacts at that level. Price gets up there, creates a nice big 1, 2, 3, right? So price is solidifying itself, right? Price comes back up to this order block, goes back down. Price comes back up to these highs, go back down. Price consolidates up back to those highs, go back down, right? Price pushes away and breaks lower. So the key is once you see price react like this, this is your key indication of your range. So now you can go down to the 1 hour chart. Start looking for premiums. Well, let me show you. Let's not forget this step. So now I'm going to mark this last candle that was made in the 1, 2, 3, which is here, and change it to a 4 hour color, which is black for me. And now anything, actually I think I'm doing it wrong. You got to go to the candle after the candle that you're using. So it'll be this candle. right? And now anything behind this point will be used as a, you can use it as a premium. Like you could have been looking at, well, I want to get rid of this. So I want to mark these levels off. I don't know why I did that color. Okay, so look, you could have been looking at this ultimate high, which would have had buy stops above it, right? This rejection block, this high, right? It's two levels you could have been looking at. You could have been looking at this order block open right here, right? And it's pretty much, and you could have been looking at this, the main threshold of this order block, which would have been right there. I basically just measured the 50% of this up candle before the down move. Look at the precision. One hit there, comes up, tap the 50%, makes another move down, comes retest that level one more time, makes another move down. When price start breaking lows, you can find these swing points to anchor your fibs on and look for potential profit taking areas at the 127, the 1414, and the 161.8. Right? So now you can look at it like this. These price got your 1 hour levels. Price hit these levels. You're down at the 15-minute chart looking for reasons to get short. Or waiting for elephants to put their foot in the water. I don't know why that's not sliding over. Weird. So yeah, you're gonna be waiting to see if elephants are putting their foot in the water because that's gonna give you your displacement that you actually need to get long or short in the market, right? Here we go. So price hits there, breaks lows. You could have been short there. Dropped 163 pips. Could have used it as focal point for a take profit. 1414, 127, nicely hit. It combines up with a range or higher time frame order block, right? When price comes up there and hit it again, what could you been waiting for? Price makes a move away. If you want to caught that, you could have potentially got short on a retracement. Price hit 62, converging with the order block right here, the low of it. As you can see, the high of this candle is 1,422. The low of this candle is 142.97. I mean 142.22. I'm tripping. 142.22. You can see that information up here. So perfect hit to that up candle. And then I move down. Almost 100 pips. Did it one more time. Price moved away. What do you expect? Both balance range. Double balance range. This is a range, makes a range, in a range, then balance that range. So that range can be used as consolidation, just as this could have been used as a consolidation. And you see that all the time. You see that all the time, right? It's like this. Boop. Like this is the whole range, but this is a balance range now. So now you come back to run a stop. So this, come back, get the order block to this before they continue down. And that's key to know. You have to know that in order to be maneuvering yourself around price action. So I think I'm gonna end this video here. Number 3 is gonna be a little bit more longer. We're gonna kind of like really deep down and thorough. I'm gonna have everything pretty much written out on a document of everything I taught you guys so far, and then we'll go through everything separately, kind of like how I've been doing here, but each thing separately in detail. And these 3 videos should help you put all of this together in the form of a system. So with that said, I hope you guys enjoy this training. I hope that what I've been teaching you about the Fibonacci's and the order blocks and waiting for levels to get hit and price to move away from them and come back. Hope all of that stuff been helping you. And I hope this video that we do tomorrow will kind of really be the glue to stick it all together for what we learned so far. So I hope you guys enjoy this video. I'll see you guys next time we do our training. And that's that. Okay. Stop share. And